Hey, Tim Sykes here with another video lesson. I'm not feeling that great, so excuse my stuffiness. I've been traveling, I've been trading, I've been teaching, I've been planning these 1,000 schools that I'm building, and it's not easy to build the schools. I was actually just giving a webinar to my Trading Challenge students, a live webinar, which I do once a week. Excuse me. And I was saying how, it would be easy if I just hired somebody else to build all the schools for me, but I actually want to learn. So we're taking it one step at a time. I'm building 10 schools to start, and I'm learning a lot about, how hard it is really to build a solid school. I'm not just going to build a school for the sake of building a school. I want it to work. So we're actually working with the villagers in Cambodia, Laos, and Bali so far, and it's a lot of work. So anyways, that's why I've been staying up all hours of the night talking with these various people and groups in Asia trying to get this done. But right now, I want to talk about my worst trade of the year, CGRW. It's actually could have been the best trade of the year. Someone actually just tweeted me. They just nailed it. Um, this really frustrates me because this is a multi-day setup. Um, it's been spiking so nicely for the past few weeks. Let me just show you the 1 year chart. So it's gone truly supernova. And I love trading volatile stocks. You have to train yourself to focus on only the most volatile stocks. This is where there's money. Even though I screwed up, even though it was my worst trade of the year, I only lost 642 bucks because there was such an opportunity. If I timed it perfectly, if I'm selling right now, let's say at 290, um, I'm making what, 35 grand. At worst, I was down 15 grand. Let me go over it breakdown by breakdown because I would never have held it this long, first of all. So I never would have had a $35,000 profit. I never would have gone that big if I didn't screw up. What I have found though in the past is that some of my biggest screw ups have led to my biggest gains because I'm only so big into the trade because I got in at the wrong time, even though it's a good trade. So that's this example. As I'm about to explain, it was a good trade. It was a good setup. I was right to focus on it. What I did wrong is that I got too excited. I went too big too soon. Fortunately, I have a big account where I can dig myself out of it. But if you have a small account, this can be disastrous. So I wish trading were easier, where it's just like, okay, good trade, bad trade. But this has a mix of both. And you have to kind of dig into the details to get to, the core of the lesson here, whether it's good or bad, what I could have done better, what I could have done worse. And that's why next year I'll be trading with two accounts. I'll have a $5,000 account that I'll make most of my trades with, so you can see how to grow a small account. But then I'll also have $1 million account just because I think that it's very useful to show lessons from trading big. There's lessons from trading small and there's lessons from trading big. And it would be bad if you didn't get lessons of both because you have to trade different account sizes differently. So on this one, and you guys who are Trading Challenge students, the whole webinar is archived for today, October 19th, 2016. So you'll see the 90-minute webinar. And I encourage you all Trading Challenge students to watch it repeatedly so you can see what I did right and what I did wrong. But long story short, I was looking at this as a potential short coming into today because it was up so much and it had really gone truly supernova. Near the beginning of the webinar, I said, okay, this is a potential double top here at 344. We were watching it in the 320s. I was trying to short it. I could not find any shares to short. And I was saying how I didn't expect it all the way, first of all, to go down to 2. I thought that when it took out 320, let me show you yesterday's support too. Yesterday's support was like 310. So once it took out 320, 310, and then I thought there would be a lot of stop losses at 3, I thought that would create some panic selling and take it down to maybe 250, right? Like lose all of yesterday's gains and then have some support in here in this choppiness, maybe 240 at worst, because there was some support here at 240. As it turned out, we got true panic. This is a classic cliff dive, falling off the cliff. And I got faked out by this one green candle, thinking that this was the bottom and that I could buy it here at 250, 260-ish and sell it on the bounce to 3. We did get the bounce to 3. The only thing was that this was a fake out and it led to this massive panic and actually quite a nice double bottom here in the low twos. So I was right about the bounce. I was wrong about the magnitude of the drop. So let's get to some of my trades here. As you can see, realized total losses of $642, and I have a loss of 1,000 unrealized on some long-term positions. But this was the scary thing. This realized loss was, I guess it wasn't realized, but at one point this unrealized loss today was 15,000. Because I started buying CGRW here at 270, 266, 267, 265, 257. Those were all not so great trades, especially this 5,000 shares at 257. Obviously I wish I could take it back. But then I started adding more, and a lot of people on the webinar were asking, why aren't you cutting losses? So rule number one for me is to cut losses quickly. The problem with buying a panic like this is that you can't cut losses quickly. This is why it's so dangerous. Because, when it has this one green candle, okay, maybe it's the bottom, you could sell into this. But here, all in, what is this? 1, 2, 3, 4, 5, 6 minutes, it drops from 260 down to 2. That's because everyone is trying to sell and cut losses because they were wrong about the bounce here. So for me, I wasn't even considering cutting losses. Now, I know that might sound strange because rule number one is cut losses quickly, but I've been in this situation before. And this is why I tell so many of you guys, when you have a small account, it's not the end of the world. You're practicing. Even though you want to trade with a big account, you're not ready. You have to go through the small account ranks. You have to learn the small account lessons to be better prepared for trading with a big account. And part of my problem on this trade was that, frankly, I've been trading with a small account all year mostly, and I just haven't had practice with big account trading. And I didn't have the right mentality. I knew that this was a potential dip buy. I knew that it could bounce nicely, and I just went too big too soon. So my buying here in the 250s, 260s, okay, I don't mind these small buys, buying 2,000 shares, buying 2,000 shares, but buying 5,000 here, buying 5,000 here, those were bad trades. If you're wrong, okay, understand you can't cut losses quickly, but don't just start adding to lower your average by like a penny or two. Try and see how much panic there actually can be. This is digging yourself out of a trade, and it's very, very risky. As you can see, I almost really, lost a lot. That would have been my worst trade of the year. I haven't had any losses of $10,000 or more this year, so I've really clamped down on the big losses. This would have been the first, and it was because I went too big too soon. I don't mind these buys. Just if you have a big account and you're starting to buy a potential bouncer, start small. There's no reason to go big, because then if you get a real big panic like we saw, it's very tough to lower your average. And so here, I'm really, really buying and adding more here. Let me get down here. So you can see I buy 5,000 here at 224. I'm buying with a limit of 218. This was awesome. I got some at 201. So you actually could have dip bought this at 201 if you had your order in at the right time. And obviously that was the bottom. That was the exact bottom. So buying these 6,000 shares here at 201 really helped lower my average. I got my average down to 227. And at this point, I start selling because I'm just trying to exit, because I know I have too big of a position. I have 55,000 shares at my peak, which is way too big, $120,000 position. I have 600,000 in my account, so I'm still only using 16% of my overall big account. But at the same time, this is too much for such a trade. So I start cutting losses here at 220-ish. So I'm losing 7 cents a share, not that bad, but I reduce my position size. Then, I'm selling some more here. I get some, selling some more here at 230 for actually some small profits. Then I'm selling here for some small losses. Then I sell the rest for some small profits here at 230. So overall, I was down about 1,000. Then I got the bright idea to try and dip buy it again, because I thought that it could be a double bottom. So I start buying it here at 223, maybe a little too early, averaging down at 216, and then basically selling, making back like a few $100s. I was down 1,000, and then selling here at 230 got me down like 700. That was the thing. So I'm down to roughly like 700, 750, and then I make like 100, 150, dip buying it here in the 215 level, selling it in the 220s. I did some good things right and some bad things. Number one, putting in the order to dip buy in here when it's dropping from 220 down to like 201. This is pure panic. And, you know, as it turned out, that was the exact bottom. You don't know exactly where the bottom is going to be, but when you know that there's true panic, that's what I like buying. Normally, I like buying at support, but for me, this whole slide was caused by stop losses going off, panic selling, and I knew that, you know, because I was in so soon, that a lot of people who were probably buying here in the 260s, 270s were trying to cut losses. And so all of this selling culminated right here. And this is just mass, you know, maximum panic, mass exiting. And that creates opportunity. And you actually had two opportunities. You could dip buy it right here at 201 and sell it in the 220s and make 10%, or the double bottom was even better. And I had the right idea on the double bottom, but I was a little too freaked out by being so wrong the first time that I didn't have the guts or the rationale, and I'm a little sick too, so I didn't have the mindset to really go big on this double bottom. But here, 210 to 3, I mean, 90 cents a share of upside. And what is this? This is under an hour. So you can make nearly 50% on your money in under an hour. I know people say penny stocks are random and they're scary and they're manipulated, but this bounce was here. Even though I mistimed it and all in all, I ended up down a little bit. I had the right idea. I was on the right track. More importantly, several students absolutely nailed it. A few people were tweeting me just as I was making this video lesson. Here we have this guy. Jerry made 2,100. Where was the tweet that I saw? Right here. Selvo. This is a damn good trade, and this is perfect. I got to retweet him because this is the good trade, you know, and this is very well risk adjusted, very well executed. He nailed the top. He didn't even catch the exact bottom. But this is what is possible here with this trade. And this is, you know, why I'm really glad that I'm a teacher. You know, as a trader myself, I lost $640. That sucks. But as a teacher, giving a live webinar while this all happened, you know, I showed what happens, the risk of breaking rules where I'm just buying a falling knife. But then B, I also showed how to dig yourself out if you have a big enough account. And then, you know, D or C, I don't even know where I'm at. This is how bad I am mentally right now. You got to see that I was eventually dead on right that the bounce was going to happen. So lots of lessons. Trading is a very inexact science. But when you have a big panic like this on a first down day where, you know, this could easily come back to its highs. We've seen similar plays, CANN, have a big dip, and it came all the way back to its highs and broke out to new highs the next day. CBDS is also another one that's been dropping big today, but it's also bounced. This also had a panic from 776 to 561, and this had a nice little 80 cent a share bounce here. CANN didn't bounce as much. It was at 387, 440, so 60 cent a share bounce on a $4 stock, so 15%. So I actually chose the right marijuana stock that would bounce the most. I was just off on my timing, and that is the lesson. I also saw a few other people. That was Selvo right here. He said $720 profit. Thanks. Steady Eddie said, yeah, you had a position size of 125,000. Yep. I went too big too soon. But again, I'm still only using, you know, 15, 20% of my overall account. So you have to keep that in mind. That's the benefit of having a big account. And that's why I'm really excited for next year, trading with just, you know, 5,000 and then also trading with $1 million. And here's, you know, Chris Collis did well. You know, he's making 40 cents a share, so 10%. Not bad. JK from Nova made 50 cents a share. You know, so there is money to be made here on all of these dip buys, but you have to be careful about dip buying too big too soon. That's the main lesson here. And you have to keep everything kind of in you need to think about your whole account size. You need to think of everything in proportion to your overall account size. So I didn't have any problems with my proportionality of my account size. I just didn't get my average down big enough. And then, I was kind of a little screwed up in the head because I haven't been trading this way. So I got out too soon, but I was on the right track. And this I would do again and again, probably better, the more times that I do it. So practice makes perfect. This was a very, very imperfect trade. But at least you guys can see, the 50%, literally 50% upside in from bottom to top from 9:54 a.m. to 11:08 a.m. So an hour and 14 minutes, you can make 50% on your money if you time it exact. You're never going to time it exact, so don't even think about that. Focus on making trades like this, like Selvo, who's in my chat room, and he bet $2,200 and he made $700. He took the meat of the move, and that was fantastic. So I'm glad, even though I lost a few hundred, as long as my students do better than me and they learn. There's so much that you can learn from losses. I know we're also focused on profits and we cheer traders when they have profits, but it's through losses that you can really increase your education. So I am proud to share with you my worst trade of the year. Whether I lost 600, whether I lost 15 grand, it doesn't matter to me. I can afford both of them. But you guys got to learn in real time, real trading. And I wish more people would do this, more traders, more teachers would share all of their trades, including their losses, whether it's on live, webinars like I do with my challenge students, or in follow-up video lessons like this where you can see exact executions. There's so much education out there, and it just pisses me off that it's like so unlocked because people are scared of looking bad or embarrassed. They feel like they only have to show their profits. You don't have to do that, guys. This goes to every single one of you. Profitly now has over 100,000 registered members. We need to share our experiences more. And once we start doing that, we can learn from each other. Not having some bullshit, 100% of the time winning percentage or even 95 or 90%. The best traders in the world that I know are only winning 60, 65, 70, 75% of the time. No one ever who is legit wins 80, 85, 90, 95, 100% of the time. Those people who claim to do are not showing all their trades. So just be careful with who you learn from. It really pisses me off that people out there who are claiming to be teachers, they don't show all their trades, they don't show all their alerts. I see some chat rooms literally where they enter in a stock and then they don't ever have an alert to sell, and people are just left wondering what's going on. That's BS. Show everything. If you're real, show it. The problem is most people are not real. Most people are not actual millionaires, so they can't be real. So be very, very cautious with who you learn from. If they're not selling and showing alerts and if they're not fully transparent with all of their trades, they're hiding something. And you have to wonder why they're hiding. And right now we're in a very nice bull market. But if this market turns like it probably should in the next 2 to 3 years, you're going to have a lot of frauds, a lot of fakes exposed. And a lot of you guys learning from the wrong people aren't even going to realize it until it's too late. So I get accused of being fake. I show my trades, I show my losses, I show my wins, I show my screenshots, I show my executions, I do live trades. If you think I'm fake after all that, then you have some issues. And I also have more millionaire students and video lessons than anybody else. But just be careful because I see a lot of horror stories out there. And I really think that we're just beginning to see what is going to be really exposed in the world of trading. And remember, 90% of traders lose money. So don't feel bad if you lose small. Don't feel bad if you cut your losses quickly. Don't feel bad if you're paper trading and you're not even trading yet. There's no one right way to trade. You don't have to trade right away. It's not about winning big. It's not about trading big all at first. It's about learning gradually over time. And students like my student Selvo, who just traded this exact same stock, this exact same setup as me, but did so much better than me, this makes my day. I'm already feeling better after making this video lesson. Just talking about my mistakes and my losses is like my confession, and then sharing students who have learned to do better. That is the future. Education rocks. I'll see you guys in the chat room. And challenge students, please watch the archive webinar today. It's gold.